Now I'm joined by the head of economic research for Mitsubishi UFJ Securities, Brendan Brown. Brendan, thank you very much for coming in.
Hello.
So I want to start with a very simple question on QE2. Will it work?
I think it's completely blown up in importance, but it's not going to have a very big impact. After all, the Federal Reserve is only buying excess reserves to the extent of about 3% of GDP. It's not very different from issuing treasury bills and putting them into banks. And there's absolutely no magic by which this is going to feed into the broader economy. The good news is that the US economy seems to be picking up steam anyhow, and this will probably be another occasion in the long history of the Federal Reserve when by the time the Federal Reserve acts, it's already too late and not actually needed.
Nevertheless, growth has been slow, at least below the sort of levels we were seeing in the early months of the recovery. Unemployment is high. How much stimulus are you expecting to see?
Well, when we look back, the Fed's diagnosis of this slowdown has been totally wrong. We heard from the Fed that there's been an inventory cycle downturn, that there's deleverage, that consumer spending is under the ropes. But in fact, when we saw the economic data last week, consumer spending has been going ahead at 2.5% per annum. And what we actually had was some slowdown in the IT sector, what you would call a sort of growth pause, which actually seems to be reaccelerating again now. We're getting lots of good news from the IT sector. So again, the Fed's analysis seems to be very much behind the reality of what's actually happening.
So you don't think there's any need for QE right now?
I don't see any need for QE2. I think QE2 is actually going to make the outlook more unstable, and you can see this in the extent of frenzy we've got in many markets and related to this, and it's inducing a lot of instability, which is counterproductive.
But again, I mean, I go back to the argument that we've been hearing from Ben Bernanke, and there's been a great deal of debate over this. Growth is not where it should be, despite the fact that we have low interest rates. We need that in itself, people are saying, is an argument in favor of QE2, and then ongoing concerns about a deflationary spiral.
Well, deflation is nowhere to be seen. Inflation is running at about 1%, which is fairly typical of an economy coming out of a deep recession. And really, patience is a word here. After all the misallocation of resources and malinvestment of the bubble period, it takes some time till we get a new wave of economic activity growing up. The good news in the US is that we are getting business investment spending picking up, but we do have IT spending now running 10% above the previous peak, and the private sector of the economy does seem to be moving forward, and profits are back up to that 2007 peak. All of this is good news for a private sector-led recovery.
And if I can just quickly ask you about the midterm elections in the US, what do you take away from this in terms of how it could impact on decision-making with regards to the economy?
Well, it's clearly going to rule out any sort of fiscal Keynesian stimulus, which was impossible given the composition of Congress. The first big issue probably is going to be bailing out states such as California, which is a no topic now, given that the Republicans control Congress. So there's going to be more pressure downwards on public spending. The good news for Bernanke, I suppose, is that he's not going to face too much pressure. The Tea Party was very much anti the Fed, but we're not going to be able to do much about the Fed because the Democrats continue to control Senate.
Thank you very much, Brendan Brown from Mitsubishi UFJ Securities. Thank you.